Thank you so much for joining. In this video, I would like to go through the income statement again. And because I have done another session on income statement where I gave you an idea what income statement is all about, today I want to break it down to give you an understanding how IFRS and US GAAP income statement look like and what the difference is between those and my finance education income statement. When I introduce finance, I use a slightly different income statement because it allows me to introduce and explain certain topics better. And how I usually do it is we start with revenue. I go through item by item, basically the income, the products you're selling, the revenue, sales or turnover you generate, cost of goods sold. Then you have gross profit minus sales, generative and administrative expenses. Then you have EBITDA, depreciation and amortization will be deducted. Then you have EBIT, then your interest, then you have earnings before taxes minus taxes. Then you have net income minus dividends. And then you have retained earnings. Yeah, and I do this because I can illustrate a few different topics. I can say these are my direct costs. I can say these are more my indirect cost. This is a non-cash item. I can introduce and sell interest goes to your debt holders. Taxes go to the government. Dividends to your shareholders. Retained earnings go to your balance sheet and hopefully improve your future performance. I can also say from here to basically EBIT. This is purely business model focused. It tells you whether your business model is successful, whether you earn enough money, whether you can sell your products to customers and how your cost structure is. Whereas from here on, this is more your financial performance. Here we talk about business model operational performance because here it has to do with policies, accounting policies and guidelines. So depending on how you account for depreciation and amortization, depending on your capital structure, those are more internal related and you can change those figures more easily. Whereas from revenue to EBITDA, you can't change much because this is whether you are able to sell your products to customers. Yeah, so I use this structure a lot to illustrate certain ideas. However, this is not how it is reported under the under IFRS. Under IFRS, we start with revenue, yes. Then we usually call it cost of sales. This is quite identical. Then as well we have gross profit. This is the same as well. Then we call it minus operating expenses. For example, SG&A as I had before, R&D, other expenses. Then depreciation and amortization. Then operating profit. This is basically my EBIT, operating profit. Then we have plus other income. Or minus other expenses, which I'm not looking at because it doesn't help me to explain certain concepts. Then we talk about finance costs, interest expenses, similar to my line item. And then we have profit before tax, EBT, quite similar, minus income, tax expense, and then here we call it net profit or profit for period, minus non-controlling interests. I explain what those are in a second. And then net profit attributable to shareholders. Yeah, a bit different how the structure looks like. A few items similar, structure a little bit different. And then if we look at US GAAP, again, we start here with revenue. This is identical. Then here, COGS. Then we have the same gross profit. Then as well, operating expenses plus minus non-operating income or expenses. Operating expenses. Yeah, I forgot one line item. We have equals operating income minus interest expenses equals income before tax, EBT, minus income tax expense, similar to what we had before. And then we have net income. And here it's a bit different, minus preferred dividends if applicable, dividends, and then equals net income to common shareholders. Yeah, and the items we have introduced new are other income, other expenses. These are non-core business revenue or expenses. Here, for example, gains or losses on asset sale, foreign exchange gains, losses, government grants, not part of core operating profit, but still included in the overall profit before tax. And this really helps to separate regular business activities from one-time or irregular items. Then we have finance costs. Where are our finance costs here? This specifically refers to interest expense and other borrowing cost. And IFRS separates finance costs from operating expense to clarify the impact on profits. It's similar to what I had here with interest, but it's named slightly different. Then we have non-operating income and expenses under US GAAP. Similar to what we had before, includes items not related to core operations such as investment income, asset sale, restructuring costs. It's also shown separately because you want to know what is one time or what is recurring. And then again, helps investors to distinguish core earnings from incidental income expenses. And then we have, what else do we have? non-controlling interest here. Non-controlling interest here under IFRS. This is when a company owns a subsidiary but does not own 100% of it. And the portion of net profit belonging to minority shareholder is shown separately here. And this is to ensure that only the profit attributable to the parent company shareholder is reported as net profit attributable to shareholders here. And yeah, it's not shown in my format because, again, it doesn't help me to explain some of the concepts, but under IFRS it is. And then the last one here under US GAAP, preferred dividends. If a company issues preferred shares, the dividends paid to those shareholders are subtracted from net income because you want to see your clean net income here that is available to common shareholders. Yeah, which I again haven't done here. So what I want to do is mainly to show you it's basically more or less all the same. For sure, there are some accounting nuances, but whenever you come across other names such as operating profit, have in mind, okay, we are on EBIT level. If you hear income before tax, then you know, okay, I'm here on EBT level. And then you get an idea where you are in your income statement, whether you are quite high on the operational side, business model side, or whether you are a bit further down looking at financial performance. So yeah, I hope you found this useful. Thanks again for listening, and I see you in another video. Thank you so much. Bye bye.